ever dreamed of achieving financial freedom through real estate investing, but you felt discouraged by the massive upfront costs and the slow path to wealth? Now, what if I told you there's a smarter way to invest in real estate that can help you generate high cash flow and also build generational wealth without the hefty down payments and mortgages? If this interests you, then keep watching, because in this video, I'm going to reveal the secrets to help me build a portfolio of 7 properties generating $34,000 per month in net cash flow and how you can do the same. If you're new here, my name is Preston. Over the last 5 years, I built a real estate empire worth over $12.5 million with 40 rental properties and 7 highly profitable short-term rental properties across multiple states. But let me tell you, my journey was far from a smooth ride. I started with limited capital and I faced countless challenges along the way. That's why I'm excited to share my hard-earned experience and help you avoid the pitfalls that I encountered. Now, through the years of trial and error, I discovered that short-term rental investing is hands down the most effective strategy for achieving financial freedom through real estate. And today I'm going to dive into the 5 compelling reasons why short-term rentals beats traditional rental investing, and also introduce you to 2 powerful strategies that can help you succeed, even if you're a complete beginner. Now, I know what a lot of you guys might be thinking, okay, well, Preston, I've always believed that the only way to succeed in real estate is by saving up a large down payment, securing a mortgage, and then dealing with the hassles of long-term rentals. And trust me, I've been there. I started my journey with traditional rental properties, and while I built up a successful portfolio, I quickly realized that the path to financial freedom through this traditional model can be painfully slow and challenging. I've seen countless people struggle to make ends meet, and they pour all their savings into a single property, but they're only left with a meager cash flow that's like a couple $100 a month if they're lucky, and also limited control over their investment. It's frustrating and often discouraging, but here's the good news, there's a better way. Now, there's 2 powerful strategies. One is Airbnb arbitrage, and the other is Airbnb investing, and these can both help you overcome these challenges. But first, let's clarify the difference between Airbnb arbitrage and Airbnb investing. Airbnb arbitrage is perfect for beginners with limited capital, typically anywhere from $10,000 to $15,000. This allows you to start generating cash flow from real estate without owning a single property. You simply just lease a property from a landlord, you furnish it, you list it on sites like Airbnb, and then you pocket the difference between your rental income, all the expenses that you pay, and it's like digital real estate without the massive down payment. Now, on the other hand, Airbnb investing involves purchasing a property specifically for use as an Airbnb rental. Now, this requires much more upfront capital, but it does offer unique benefits like tax deductions, your equity buildup, long-term appreciation, and it's the best of both worlds. You get the high cash flow, plus you get the long-term wealth building. Now, I know you probably want to learn more about this, so let's dive into the 5 reasons why short-term rentals beat traditional real estate investing. Reason number 1 is a lower barrier to entry. One of the most significant advantages of Airbnb investing, particularly Airbnb arbitrage, is the incredible low barrier to entry compared to traditional real estate investing. Let me put this into perspective for you. In today's market, the median home price in the US is a staggering $420,000. To purchase a property at this price, you need to cough up a down payment of around $84,000, assuming a 20% down payment. That's a huge chunk of change that most people simply don't have lying around. But here's the kicker. With Airbnb arbitrage, you can start generating cash flow without the need to purchase a property at all. Instead, you can approach landlords. You can also ask for permission to list their property on Airbnb. The strategy requires significantly less capital, typically anywhere from $10,000 to $15,000. This covers the initial lease, the furnishing, the setup costs, and it's a much more accessible way to get started in real estate investing. In fact, I used this exact strategy for my first Airbnb property in Arizona. By negotiating with the landlord and convincing them of the benefits of short-term rentals, I was able to secure the property without having to buy it. And in the first 30 days, that Airbnb generated a whopping $15,000 in revenue, $9,000 of which was pure profit. I invested $26,000 to set it up, and here's the entire cost breakdown. We paid $15,000 for the furniture and the amenities, $5,000 for the first month's rent and security deposit, and then we put in $6,000 for some repairs like paint, updating the bathroom, and some other minor repairs. Now, I want to be honest with you. Initially, I was skeptical that it would generate such high cash flow, let alone $9,000 in just 30 days. But this experience proved to me the incredible power of short-term rentals and their ability to generate significant cash flow with a much lower upfront investment compared to traditional real estate. The second reason is higher cash flow. As we already saw with my Arizona example, Airbnb properties can generate significantly higher cash flow compared to traditional long-term rentals. That first property I set up has been consistently averaging $4,000 to $6,000 per month in cash flow for the last 2+ years. In contrast, a similar traditional rental in the same area would likely only bring in $400 to $600 per month in cash flow if they were lucky. That's a staggering 10 times difference in cash flow. And this isn't just a one-off case. According to industry data, short-term rentals generally offer much higher returns, often 3 to 5 times more than long-term rentals. This is due to higher nightly rates and increased occupancy during peak seasons. It's like having a money-making machine that works overtime during the busiest times of the year. And by the way, if you're finding this helpful, I put together a free training where I deep dive into the strategies and the tactics of this entire business model. You can check it out in the description if you're interested. Reason number 3 is the flexibility and control that you get. Another fantastic advantage of short-term rental investing is the unparalleled flexibility and control it offers. With Airbnbs, you're in the driver's seat. You can set up your own rates, adjust your availability, screen guests before accepting bookings, and this level of control allows you to optimize your earnings and adapt quickly to market changes. Plus, you have the freedom to choose which amenities to offer, making your property stand out in a crowded market. If you want to add a hot tub or a game room to attract more guests, then you can definitely do that. The possibilities are literally endless, and the power is in your hands. Reason number 4 is the faster equity buildup. Here's a secret that most people don't know about short-term rental investing. It can help you build equity in your property much faster than traditional rentals. By generating higher cash flow, you can pay down your mortgage at an accelerated rate, building your equity in your property more quickly. So this means that you can leverage your equity to acquire more properties, and you can scale your portfolio faster than you ever could with traditional rentals. It's like hitting the fast forward button on your wealth building journey. So think about it logically. You're reinvesting your profits into additional properties much sooner, and you're essentially creating a snowball effect of growth. That's the power of short-term rental investing. Reason number 5 is the short-term market resilience. Now you might also be wondering, well, Preston, what about market downturns and economic uncertainty? Isn't Airbnb investing risky? I'll let you in on a little secret. The short-term rental market has proven to be surprisingly resilient even during tough times. During the pandemic, while traditional rentals struggled with vacancy rates, Airbnb properties adapted by offering longer-term stays and attracting local travelers. Or we can go to mid-term rental investing, where we target traveling nurses, business professionals, etc. In fact, recent data shows that the demand for short-term rentals has continued to grow, with more people opting for flexible travel options and unique stays. In 2023 alone, the short-term rental market reached a staggering $63 billion in revenue, with over 2.4 million vacation rental listings and 785,000 hosts. The numbers don't lie. Airbnb investing is here to stay. Now you also might be thinking, okay, Preston, that sounds great and all, but can you show me some more real-life examples to prove your point? Let me share with you a couple more properties from my own portfolio. I own a luxury Airbnb in Virginia that generates over $20,000 per month in gross rental income. After all expenses in the past year, it's been averaging around $11,600 per month in cash flow. In contrast, a traditional rental in the same area would likely only bring in maybe a few $100 per month in cash flow. That's a massive difference. Another example is my property here in Tennessee. With Airbnb, it generates just under $15,000 per month in gross rental income, and cash flow is around $7,200 after all expenses. These examples demonstrate the incredible potential of Airbnb investing to supercharge your cash flow and accelerate your path to financial freedom. It's not just a theory, it's a proven strategy that has worked wonders for me and countless others. And if you're worried about the risks and the challenges of Airbnb investing, you're absolutely right to consider these factors. Like any investment, there are regulations and competition to navigate. But here's the thing, with proper due diligence, a focus on Airbnb-friendly markets, and a commitment to providing an exceptional guest experience, you can mitigate these risks and set yourself up for success. I've seen it firsthand, not only in my own investments, but in the countless success stories of my students. So if you're ready to take the leap and start your own investing journey, here are a few concrete action steps you can take today. First is to research Airbnb-friendly markets. Number 2, connect with other Airbnb hosts to learn from their experience and build a support network. Number 3, create a business plan and set clear financial goals for your Airbnb investing journey. And number 4, start with a budget you're comfortable with and then scale up as you gain experience and confidence. Now, if you're serious about achieving financial freedom through Airbnb investing, I have a special invitation for you. I put together a free training where I deep dive into the strategies and the tactics you need to succeed with Airbnb, whether you're starting with arbitrage or going straight into buying these properties. In this training, you're going to learn how to find the most profitable markets, negotiate win-win deals with landlords, automate your entire operations, and then scale your portfolio quickly, all without the need to buy a single property. Plus, I'll be sharing case studies of students who have achieved incredible results following my methods. These are real people just like you who transform their lives through Airbnb investing. If you want to get instant access to this free training, just simply click the link in the description below. You're not going to want to miss out on this opportunity to learn from someone who's been in your shoes and has come out on the other side with a multi-million-dollar portfolio. Alright, so let's recap the 5 reasons why short-term rental investing beats traditional real estate investing. First is the lower barrier to entry. You can get started with just $10,000 to $15,000 without the need to buy a property. Second is the higher cash flow potential. Short-term rental properties can generate 3 to 5 times more cash flow than traditional rentals, and in my case, even 10 times more. Third is the flexibility and control that you have. You can call the shots from setting the rates to choosing amenities. Fourth is the faster equity buildup. You get higher cash flow, which means you can pay down your mortgage faster and also build wealth more quickly. And 5 is the short-term market resilience. Airbnb has proven to be a stable investment even during economic uncertainty. By leveraging the power of short-term rentals, you can build wealth faster and also enjoy a more flexible and rewarding real estate investing journey. It's not just a pipe dream, it's a reality that's within your reach. So again, if you're interested, you can click the link below to join me in my free training. I'm going to be there every step of the way, guiding you through the process and helping you avoid the mistakes that I made when I first started out. And if you found this video helpful, don't forget to like and subscribe and hit that notification bell for more real estate investing content. And if you have any questions, leave a comment below and let's keep the conversation going. Remember, the only limit to your success is the one you set for yourself. So just dream big, take action, and let's make your financial freedom a reality. Talk to you soon.